appreciate it. We now turn to the markets of economics, finance, investment, and all that we do, and again, international relations. Jim Bianco joins us of Bianco Research for an extended conversation. Jim, you are acclaimed for nailing a higher inflation. Is one of our risks into the rest of the year with a wall of economic data this week stagflation?
I think that is a risk, or the other risk is that we're just not going to have, excuse me, the stag and the stagflation. We're going to have drifting inflation higher with an okay economy, which all things equal should produce higher interest rates. I would emphasize that the big narrative on Wall Street right now is what's wrong with the bond market? Why is the 30-year near 5% or the 10-year near 4.5%? And I've been arguing because that's where they should be. This is not a high interest rate. This is an appropriate interest rate for this economy. And if we see higher inflation, we see the stagflation, or maybe not even stagflation, we could see those rates drift even higher from here.
Jim, in the equity markets, it's been characterized so far this year as obviously the big sell-off we had earlier in the year as a market adjusted to maybe bigger than expected tariffs. But since it's retraced most of those losses here, what's your call on the U.S. equity market here?
You know, I think the equity market's going to be okay. Now, okay is going to be defined as, something like a low to mid single digit return, somewhere between, say, 0 and 5 or 6%. And I know that's going to create a bunch of long faces because we're all used to 20% gains in the stock market. Now, why is it going to be only that much? Because I do think when it comes to investing, Tina, there is no alternative, is dead. The alternative is now the bond market. Yep. And you see that in, say, ETF flows and the like. The bond market has been getting record inflows. Investors are looking at a 5% investment grade yield, and they're saying that's most of what the stock market's going to give me with not as much risk. And even a money market fund at 4% yield is going to be over half of what the stock market could give me with no risk because it's got $1 NAV every day. And everybody's asking, why is all this money piling into it? Because with stock valuations, the forward PEs above 20, it's going to be very hard for the stock market to say, here's another 15, 20, 25% year to scream, Tina, all that money get out. So I think it's going to be an okay year that, 5%, 8% is not a bad year. But again, it's all about expectations. It's not going to be that 20, 25% that everybody's gotten used to.
Jim, in the fixed income market, how much credit risk do you think folks should be taking here?
Well, I think, when it comes to, there's lots of risk you could take in the fixed income market. I would suggest that credit risk would be one of the lesser ones you'd want to take. I'm not necessarily taking as much credit risk. I would take interest rate risk, that the idea that interest rates might go higher in, something like a mortgage-backed security would be a better place to go. I would basically be short duration. But when it comes to credit, I think what you're going to find is that credit is going to perform kind of like the stock market. It's going to be okay, but it's not going to be anything great right now.
Do you see the partition of American society in Chicago and your Midwest, Jim Bianco, that we see on the East Coast? I mean, Paul, you mentioned the rents in Manhattan now over $4,500.
Yeah.
The partition, the two Americas, Jim Bianco, can we sustain our stock market? Can we sustain our exceptionalism with that partition?
It's going to be a problem. You're right that we're seeing, I've called it the concentration. Recently we've seen statistics that say the top 10% of income is now 50% of retail sales in the country, and that they're driving it. And what you're finding with some of the economic data is that while the top line data is doing okay, and the Fed should respond to the top line data, the bottom half of income is not in the same position as the average data. And that's because you're seeing this big break between what the top half of income, especially the top 10% or 5% is seeing, and the bottom 50%. And if 10 or 5% of the population is driving retail sales, GDP growth, inflation, and the Fed has to respond to that, which I think is correct, the bottom half is going to have real problems. And that's been the case for a couple of years now, and I think it will be.
So there was a Gilded Age. I believe the Bianco family was involved in that out in Chicago. There was a Gilded Age, Jim Bianco, and then we enjoyed the panic of 1907. I mean, do you worry about it just is too good to be true and it's going to go on forever and ever, trees to the sky, and we need to be a little more humble in our excellence and success?
Yeah, I think so. I mean, we could all put away the velvet smoking jackets right now, and we have to get back to reality. And that is that at these valuations in the market, what you're betting on when you buy a stock market with high valuations like this, to get to your point, is everything going right? Now, if most things go right or some things go right, that might not be good enough. And as far as that exceptionalism trade, I think that's why you're seeing people shift into things like the European stock market. Right. Why? Because they've got far lower valuations. They only need a few things to go right, and those markets will respond. And so, yeah, when you come to the Gilded Age, we expect high valuations of markets to continue to go higher. Right. And I think that that's going to be difficult moving forward from here.
John from Capri emails in, says, ask him about the Fed. Jim Bianco, are they going to cut rates this year?
No, they're not going to cut rates this year, and they shouldn't cut rates this year.
I just want to get them going. The Cubs are for real, Jim, huh?
Oh, yes, the Cubs are for real. And, you Mets fans are going to be sad in October when you see what the Cubs are going to do.
Can you think, Michael Barr, jump in here. I mean, let's be serious. Tigers, Cubs, World Series, that would be better than Dodgers, Yankees.
Yes, I agree with you, because that's why you are one of the smartest people I know on this planet.
It's unbelievable. Plus, the Pope blessed the White Sox. This is great. Jim Bianco from Chicago.
Not good enough.
Jim Bianco.
Not good enough. They're going to need an exorcism.
Need a little more than that. Jim Bianco, thank you so much from Chicago this morning. I got to get up to speed on the Cubs. I'm just